Free and clear of the chatter from Wall Street, you're listening to Talking Stocks Over a Beer, hosted by hedge fund veteran and newsletter writer Mike Alkin, who helps ordinary investors level the playing field against the pros by bringing you market insights and interviews with corporate executives and institutional investors. Mike sifts through all the noise of mainstream financial media and Wall Street to help you focus on what really matters in the markets. And now, here is your host, Mike Alkin.
It's Monday, July 22nd, 2019. Hope you had a nice weekend. Today is my 25th wedding anniversary. And my wife, we were joking with some friends. We were at dinner last night. She said, "Yep, 25, the best years of my life. Piece of cake, especially married to him." We all chuckled as she said laughing about how Mike World, Mike Land, where when I'm engrossed in my work, sometimes I learned last night while I was engrossed in the conversation with everyone at the dinner table that I do have the occasional time where I might tune things out when I'm engrossed in work, and I was reminded that, which I don't need to be, that thank God behind every good man there's a better woman who certainly keeps my family and my house ticking and running smoothly. Lord knows if it were left up to me, things might get forgotten once in a while. So, but anyway, that's 25 years today. And I don't know about where you guys are, but this weekend was, it was stunningly hot. And I've lived in Tucson, Arizona. I've lived in Dallas, Texas, Houston, Texas, and New York summers are normal. And yes, this weekend was hotter than anything I've experienced. It was really only 100 degrees on the thermometer, but it was, with the heat index, it was 108, 110, and it was absolutely just breathtakingly hot. And I know if you're in parts of the country that get that regularly, you say, it's not that bad. There was something about this where the humidity was through the roof, no breeze to be found. And I think Saturday got to me a little bit where we were. I had a niece graduate from high school, and we were at their home, and they have a lovely pool outside, but even that didn't cool anyone off, and their AC had gone down. So it was one of those where it just, with a lot of people and a lot of heat, it was take your breath away hot. And when that continued into yesterday, I think we were going to get a little bit of reprieve. But here in the Northeast, we get occasional heat waves in the summertime and a little hot weather once in a while. But this was beyond the pale. And I am not a summer guy. I'm good for, by March. I'm internally complaining a little bit to myself, saying, God, I just wish it would get a little bit warmer. And I love the spring, love the fall, love the winter. Summer's my least favorite of them all, and I tolerate it. But by the second week of July, I'm ready. I'm done. You could send the heat back and bring on the crisp days and stuff like that. And my family they like the beach. My kids, my wife, very, very beach oriented. And I do it. I muddle through it. We'll go down there on the weekends once in a while, and once lacrosse is over. And but I didn't yesterday. I had some work to do, so I was home during the day, and my wife took the kids and some of their friends down to the beach. And they said actually it was quite nice, because sometimes you go down there and for whatever reason, even though you're in the water and stuff, it still makes it it's still hot as hell. But she said it was nice relief while I was in my office at home cranking a few things out. So but anyway, hopefully the cool weather comes and we're good to go. And I've been reading a lot of stuff that comes out of my friend Chris McIntosh's shop, Capitalist Exploits, and his he's got a new publication, not new now, but probably within the last year, Resource Insider, and run by Jamie Keech, who's a mining engineer, and read a lot of their stuff. And I thought it was really interesting, and I wanted to get him on and kind of get his thoughts and recap what's going on and his view of the space. And we're going to bring Jamie on now. And so, and what made me think about it is one of the CEOs was recently talk about tough weather. He's recently doing a field visit for some private company. He's a private company. He was doing a field visit up in Canada, and they were out in the field and just banging some rocks with some picks, and sent me a little video. And in that, you could. They had to wear the nets because the bugs were so bad. And I thought, okay, well, we got the heat here, but I don't have to deal with that. So anyway, we're going to get Jamie on and pick his brain and see what's going on in his view of the world of natural resources. Jamie Keech, how are you doing, pal?
I'm good, Mike. How are you today?
I'm good, man. Thank you. How's the summer going so far?
It's good. It's been busy. I got married this summer, so that took up a bit of time, and been running around and looking at some sites and, trying to get the odd day off at the beach here in Vancouver.
Yeah, it's interesting, right? So new marriage, new business, you got a lot of new stuff going on. And
I know. It's been a hectic year, actually. I've a lot. I work, out of an office in my home like you, and all my friends give me shit all the time because they say, how can you be so busy? You're just sitting at home all day or typing on your computer. And I'm like, no, there's actually a lot to do. Not as easy as it looks. I know I may be sitting there in shorts and a t-shirt, but there is a bit more to it.
Well, it's funny. We have an office about 20 minutes from my house, and it's in a nice, charming little town, and it's good. I so enjoy working from home instead, because who says you have to shower at 7 a.m. or 6 a.m.
or all day sometimes.
And then even when I do go into the office, it's, right? When you're the boss, you can dress however you want. So, but that's great. So for those who aren't familiar, you've been on the podcast before, but why don't you share with listeners who may be hearing this for the first time or hearing about you for the first time? Give us your background.
Yeah. So my name is Jamie Keech. As I said, I am the co-founder of a research service called Resource Insider. And I can get into that in a minute. But my background is essentially I am a mining engineer. I have an undergrad and a master's in engineering. I worked all over the world on different mining projects, everything from exploration in South America and Albania, and I was building coal mines in Mongolia, and then I spent a few years up in the Canadian Arctic helping to build an iron ore mine. But prior to this, the last 3 years prior to doing what I do now, I actually worked in corporate development. So for those not familiar with that term, that's sort of a combination of finance and technical evaluation, looking to buy new projects. So I worked for a company that ended up becoming Equinox Gold. It's a big-ish company here in Vancouver, about $700 million market cap. And we took that from when I started about $20 million and grew it through very aggressive acquisitions and mergers, and brought on a great team. It's now chaired by a gentleman named Ross Beatty, who's one of the most successful mining entrepreneurs ever, multi-billionaire. And it was a really, really great experience. It really was a bit of a trial by fire for me. I came from a pretty strong technical background, but when I started, I knew nothing about finance. I knew very little about the stock market. And that was obviously a big part of this role. And it was great to learn from those guys. And I learned so much that I wanted to focus on that full time. And I wasn't interested in going back and working on a mine site again, or being in a purely technical role, which is what that job was shifting to as the company got bigger. Mm-hmm. And so I started Resource Insider with my now partner, Chris McIntosh. And I do that same job now, but I do it for our subscribers. I go out and I look at good opportunities to buy in the mining, metals, and energy space. I put my own money in. My partner, Chris, puts his money in. and that's it. We're looking for great deals and things that we think will grow in value and make us and our members money.
So, what are some of the things you learned? So, you're in the field all these years. You have an engineering degree. You learn the nuts and bolts of mining, and you're in some far-flung places. Some more exotic than others. Some more interesting than others, and some more tolerable than others. I would, I would assume. um, and so you do that now, but now all of a sudden you're in business development. You're seeing kind of like how the sausage is made from the other side, and like what are in that transition? What are can you think of some of the things where you're like, huh? We don't even think about this in the field. We're just worried about where you put these pipes and the shovels and all this other stuff. What stood out to you? Do you recall like, huh? This is kind of bizarre.
Yeah, I mean, like the first thing that stood out for me that I was no longer living in a shipping container in the Gobi Desert anymore. I could, buy a coffee and go home and sleep in my own bed.
Yeah, yeah.
And that was worth a bit of a pay cut that I took at first. I can tell you that. But from a more on a serious note, when you're actually working in the field, you think that if you build a good mine or you do your job right, things will just work out and the company will be worth a lot of money. And there's a disconnect or I had a disconnect rather, from that pure technical work to how things often play out in real life and the other somewhat softer or more nebulous factors that are involved in the success of a company from an investment perspective. And what I mean by that is, I had no concept of how important it was to structure a company in terms of who the shareholders were, the number of shares outstanding. I had no concept of how important senior management was in the ability to instill faith in the market, to promote a story, to actually sell the ideas and market the company. Those were all things that I was not exposed to whatsoever. And I wasn't exposed at all to the idea of growing through mergers and acquisitions. I mean, in mining, you see several single asset companies, and it's very, very challenging for those companies in general to get access to capital cheaply. And it's hard for them to compete to get other assets. And to grow from a single asset company to a multi asset company can often be a very Herculean step without the right people involved and a bit of luck and good decision making. And seeing how that is done was something that was very, very valuable to me.
And valuable in the sense valuable. You said, huh, I see this. It's helpful for me to see how it works. Or did you see as time went on inefficiencies in how it's done, or what did it open your eyes to about how the sausage is made from the banking side, from the finance side? What surprised you?
I guess what surprised me, I would say, is that it's often a game of compromises, insofar that it's a trade-off. If you're trying to grow a company, it's not always just go out and buy the best thing you can find or discover a new mine and develop it. It is, you have a certain amount of money, you have access to capital, your team has a certain expertise, you have a range of assets that could fall into something that you could develop or add value to. And it's a matter of finding what you can get or taking what you can get and finding creative ways to actually eke value out of those things and grow it. I mean, it's very easy for a Barrick or a Newmont to go out and buy whatever asset that they want. If their engineers and their geologists say this is the one we need, they have access to so much capital at such a cheap price that they can just take it. For the companies at the junior end of the scale, there is a lot of creativity involved in growing the company, and there are different strategies. There's growth through exploration, which is, obviously the highest risk, but also the cheapest. There is purchasing developing assets, which some people have done very well, normally those who have cheap access to money. And then there's the attempt to buy operating mines. And typically the operating mines that are for sale are the ones that somebody else doesn't want
Right.
by its very nature. So
Yeah.
you've got to be able to look at that and say, how can I how can I make more out of this than it's currently doing? How can I improve this? And that is very hard because most of the time the companies you're buying it for, they're not sorry, the companies you were buying it from, it's not run by incompetent people. It just might not be one of their priorities. It
Yep.
might not be their A team on it, or it might not have the size or lifespan that fits into that company's growth portfolio. So you got to figure out, is there a way that I can really eke value out of this for us, for where we are, and then use that and leverage that um, asset base and excess cash to grow from there. And so that was a lot of what we were thinking about and looking at.
So, and then, that's, yeah, I guess in any industry, if you went from operations into the finance side, you'd have an eye opener. Now you're in the mining industry, and I keep a little note posted to my computer screen that says, "A mine is a hole in the ground with a liar standing next to it." Mark Twain.
That's relatively accurate. Yes.
Yeah. And it just always is a reminder. And of course, not all companies are like that. But when you're in an industry that is very capital consumptive, because you are doing a tremendous amount of exploration and development, especially on the exploration side, where most exploration doesn't yield anything. So you have to dress it up and make it look pretty, and try and raise capital. And I not all, but I believe many of the management teams believe that what they are shooting for is going to yield something.
Yes.
But
Yes.
you do have some charlatans, like in any industry. In the mining space, you tend to have a few more, probably. But it's so. How do you, I guess as a mining engineer, it puts you at somewhat of an advantage to be able to look at projects and say, that just doesn't pass the smell test right away? Or how do you apply your prior life to what you're doing now with respect to that? And the reason I ask is, I was at the Vancouver conference in 2018, and I saw your talk, and it was how you got screwed in 2018. And I thought it was like a seminal piece of work for for a guy from industry talking to people, saying, "Listen, Mr. Investor, Ms. Investor, here's how you can get run over." So how do you marry your experience with what when doing on the engineering side with looking at projects?
Yeah. So my view of mining, and one of the problems and interesting aspects of it is that it self-selects for extreme optimists. Um, to especially in the exploration stage or in the entrepreneurship path, to have the gumption or the inclination to go out and do that, you have to be extremely, extremely optimistic. And I mean, just statistically, the chances are so not in your favor that you have to be willing to take extreme chances. And it only selects for people who believe beyond a doubt what they're saying, even when all the numbers are stacked against them. And the problem is there's an extreme survivorship bias, meaning that we only typically ever hear about the ones that it works out. There is always that story of the guy that bought his stock at a penny and sold it for $100 or whatever it is,
Yep.
and people see that, but that guy
And
don't
repeat
see
it and repeat it and repeat it, right?
yeah,
When there's as reasons why they should do something.
they don't see the corpses of washed up mining promoters littering the streets of Vancouver on a day-to-day basis, and they are out there. There's people that are trying all the same moves, but with no success. And part of that is incompetence, and part of that is just bad luck, because most people aren't going to make it, even if they do the right things, even if everything does look good on the project from an early stage. The other aspect is, like any venture industry, there's so much opacity in terms of a project or an idea, that it gives a lot of leeway for the would-be charlatan or uh, scam artist to
Yep.
to make to thrive there in a way that they can't in a lot of other industries. So to get back to your question, how I actually look at that, I mean, really, it's three things. It has to be technical, financial, and people. It's very simple. Technically, I'm in a good position to actually have a good idea of whether these projects are going to work or not. I've worked on a lot of different projects. I go through the technically available information in detail. And more importantly than that, I pool a lot of very knowledgeable and very successful technical people. I don't claim to be a geologist. I don't claim to be an expert on every type of deposit and every type of mining. However, I probably do know an expert on every type of deposit and every type of mining. And I never make an investment with my own money before talking to the people that are familiar with that part of the world, with that type of deposit, and with the people involved in it. Financially, it has to be set up. A company has to be set up in such a way that shareholders at least have a chance of succeeding. And this was a big part of what I talked about at the VRIC deposit or the VRIC conference, insofar that how people get screwed in 2018. People tend to get screwed because they're playing a rigged game. Exploration is hard. Often it doesn't work out and people lose money. And that's okay if everyone does what they say they're going to do and the thesis doesn't prove out. But if the company's structured in such a way that the management is getting millions of shares for a fraction of a penny prior to doing any work, and then they go public and sell those same shares to their would-be shareholders at 10 cents, at 25 cents, at whatever it is they can get away with, that management team has already made a fortune. And what that means is that even if the share price is crushed, even if it's halved or it's 10% of what they went public at, they're still making a lot of money. So it's really a no-lose game for people in that situation. And that is something investors and myself are trying to be very aware of, because you want to see that investors are coming in on similar terms to management. I don't think that I think that management should be rewarded, given that they're taking the risk. They're maybe putting careers on hold at banks or big companies to go out and launch their own venture, and there should be a big upside for that. But it shouldn't be in such a way that they win regardless of success. A good example of a company that I think does it right is where I used to work, Equinox Gold. Ross Beatty, or the management team, Christian Milau, CFO, COO, they all bought into that company for very, very significant amounts of money at $2, the highest that stock had ever been. They're trading around $1.30 now. That is a management team that is extremely motivated. That
Right.
Most of their shareholders actually got in at cheaper prices than they did. So they want to have a win, and they're not going to win unless shareholders win. And the final thing I said is people. This is kind of a nebulous one and hard to quantify, but you want to be investing in good people that are going to do the right thing. To our point earlier, there are a lot of charlatans in this space, and unless you're incredibly savvy about how these things work, it's very easy to get taken advantage of and have no idea that's happening.
Yep.
So I typically invest almost probably 90% of the investments I've made in this space are into the companies of people that I know personally, and I know how they operate, I know how they make decisions, and I know they're honest. For those of you at home who don't have that luxury of knowing a lot of these management teams, I would say invest in people that have a proven track record of doing things right. There's a very, very, very clear Pareto's principle at play here in the mining space, the 80-20 rule, as it's commonly called. And I would say it's more extreme than that. Probably 5% of the people in mining create 95% of the value. And it's very easy to find those people. It's the Ross Beatties, it's the Lucas Lundins, it's the Richard Warks. There are several teams out there that have managed to beat the odds by an order of magnitude. And, I knew one fund in New York. As far as I could tell, Mike, their only investment strategy was to invest in things that Ira Thomas and Lucas Lundin were doing. That's it. And you know what? They probably outperformed most of the market. Yeah.
That's interesting. So how, so you do that presentation, which was great. I was very well received. But at the time you're launching a new business that is focused on mining and focused on helping people get a seat at the table with certain private investments. How was it? Well, how was it received in Vancouver amongst the mining amongst the mining folks?
Okay, I
And you
probably
live in
shouldn't.
You live in
Yeah, I know,
Vancouver
I know.
too.
I probably shouldn't say this, but I'm going to say it anyways. It was very funny. I was expecting a lot of blowback on that speech, and I was kind of like trying to keep my head down after that. And then about a week or two later, I bumped into this. All happened a few days in a row. I bumped into people. One of them at a bar who will remain nameless, but is exactly the kind of person that I was thinking when I gave that speech. And he came up to me and he said, "Jamie, really good work. We need more people like us in this industry and like bringing attention to that sort of issue." And I was just like, "Oh, okay,
It's
good, thank you."
yeah.
But it's like it goes to show you, like no one, and this comes down to a lot of what I view in both life in general, but investing is that no one thinks they're the bad guy, and no one thinks that it's. You should never underestimate someone's ability to convince themselves that what is best for them is also the right thing. And
Yep.
I think that's what most people do. I don't think they go out and they have a malicious attitude and say we're going to screw people over. I think they've got a wife, they've got kids, they've got bills. They've housing in Vancouver is insanely expensive. They have an opportunity to make a lot of money potentially, and that's a very very hard thing to say no to.
Well, it's funny. Your partner and my buddy, Chris McIntosh. I laugh because Chris lets it rip sometimes, and I can only imagine. I would imagine in the last year, there's been a time or two where you've had to say, "Please tone it down" with your view on certain things, because Chris is, he's like me. He's a little curmudgeonly and cynical, and I would imagine that you're the one who's there in Ground Zero in Vancouver, and
Yes,
he's in New Zealand.
Chris is less concerned about developing and maintaining productive relationships than I am. Let's say that.
So okay, so the resource space is big and vast, and you have a lot of choice, and you've had exposure to different commodities. So as you were laying this out a year ago when you started Resource Insider, you could look at gold, you could look at zinc, you could look at copper, lead, nickel, you pick it. How have you morphed into? And by the way, I should disclose. By the way, uh, Chris and Jamie and Resource Insider are investors in Sachem Cove, which is the investment vehicle that I run for uranium. So they put their money where their mouth is on that. But how did you guys decide? How do you, not you guys, but how do you decide where you're going to go? Because let's talk about the world of resources, natural resources. I mean, it's vast, and different cycles at different times. How have you been able to focus? What was the game plan going in, and how have you seen
Yeah.
that morph?
Well, that's a good question. And Chris and I complement each other very well in this because Chris is a generalist macro investor. He has a very macro view of the industry and where he wants to focus in the world and specifically in different commodities. I'm almost the exact opposite. I'm a very micro investor. I have probably 90% of my portfolio is in the mining space, and I would not recommend that to anybody else, but that's sort of where I live and breathe and where I am most confident and comfortable making money. But I am almost commodity agnostic insofar that I think the company on an individual level is going to succeed. And so we've been able to pair that very, very well. And when we started this business, the idea was, look, we're going to look anywhere that we can find value in natural resources. Doesn't matter if it's gold or lithium or graphite or uranium or whatever. Now, how that's actually played out, the majority of our investments so far, I would say just over 50% have found a home in gold. We've done copper and zinc. We've looked at obviously uranium with you. And then I've been looking very hard at battery metals, particularly lithium at this time.
Mm.
The reason for that, it's actually quite simple, especially from a micro perspective. When we are, the sandbox where we play and I have the most sort of bang for my buck is in these micro cap companies that are either at the exploration stage or they're new development or operating companies. I know the management teams there. I know how these companies operate. I'm very competent at evaluating these deals. And I live in Vancouver, which is the home. It's sort of the venture capital home of the mining industry. Mm-hmm. So we're looking for startup stage companies or struggling companies that are about to get a new injection and a new lease on life. And the majority of those companies are in gold. That's the reality of how it is. Something like 70% of all exploration dollars goes into the gold sector. There are a few reasons for that. One of them is it just tends to be cheaper to discover and develop a gold mine than it does, for example, a giant copper porphyry mine. After gold, there's copper. And then after that, it's the exploration dollars and startup dollars are very thinly spread amongst the other commodities. So that's our investing has really paired the opportunities we found available. And beyond that, I actually love gold right now. We're seeing it finally in the market, having a bit of a run. It's well over $1,400 now. And I don't think that equities have caught up to that in any way. So that is going to be a focus of our portfolio for at least the coming 6 months. And then we're also developing out in copper. And as I said earlier, battery metals right now. I'm spending a lot of time on lithium.
So going back to the people thing for a second. So not everyone is Ross Beatty or Lucas Lundin and some of these extra startups and stuff like that. What is it that you see in somebody if they don't have that proven track record that makes you think that it's gives you to want to green light a project?
Yeah, we'll have to get sort of philosophical here. So no, truthfully, we just did an investment into an awesome little company. It's called Kingfisher Resources. It is almost, you wouldn't find an investment like this anywhere else, I don't think. It was two guys, young guys in their early 30s, two geologists, one of them with a very good technical background, one with a very good corporate background. They had worked different jobs for different companies. They were very expert on the geology of British Columbia and the Yukon, and they had been dreaming of starting their own company for 10 years. One of them, who I've gotten to know, I consider him a friend now. His name's Dustin. He's the CEO of the company. He went out, flew out in a helicopter to the middle of nowhere after identifying this ground, spent weeks out there, staked it all himself, he funded all the costs associated with getting it registered and getting it set up all by himself, tens and tens of thousands of dollars for a 30-year-old geologist.
Yep.
And then he started going around Vancouver and pitching this project and, essentially begging anyone that would listen for money to fund this thing. And to do that on your own as a 30-year-old in the worst bear market in, probably history, is really, really impressive to me. And it got on my radar because a colleague of mine who is a phenomenal geologist and extremely successful in his own right, he came across this and Dustin pitched him and he was sort of blown away by this land package from a technical perspective. It's huge. It's 50 kilometers by 10 kilometers, which in British Columbia is unbelievably massive. It has lots of historic work on it. It's got a bulk sample that was very prospective. And for a variety of sort of political and structural reasons, this area had been forgotten by the wider mining community. And the challenge was that it had been divided up into all these tiny little land packages, which of themselves are not very useful because you need size, you need scale for an exploration project like this. And Dustin had painstakingly put them all together into something that is now extremely interesting. So I got introduced to him, and they were looking for $900,000 to start this project. Now they weren't paying themselves any salary. They don't have an office. They're doing all the money's going into the ground. It's private, so we raised the money, and right now as we speak, he's out there for the next 3 weeks doing all the exploration by hand. We're hoping that we can put all the pieces together so that they can go public next year and start operating like a real company. And so this is what I look for in someone that doesn't have a proven track record, someone that is desperately hungry to get out there and do this and isn't waiting for permission from somebody else. I don't want someone that is looking at that as a job. I
Yep.
want someone that this is their dream and goal in life, and he's going to kill himself to make it happen. And that, I think, Dustin is a prime example of.
That's a great answer. I found that very interesting. Go back to lithium. What's piquing your curiosity there? How deep are you going? What are you doing?
Well, most recently I was down in Peru looking at a lithium project that really did strike my interest. It's called Plateau Energy, and Mike, you know it well because I was down there with a close colleague of yours
Mm-hmm.
for slightly different reasons. But I got the CEO of the company is a gentleman named Alex Holmes, and I went down not really knowing what to expect. What Alex did do is make a strong case for the scalability of lithium. I think, when I look at the world, I don't see there being less batteries in the next 10 years.
Mm-hmm.
I don't see us not needing more electricity. I live in Vancouver, and I can't remember the date they said, something ridiculous, but the mayor was saying the other day, I think it was 2025, but it doesn't matter. He was saying we're going to be a city completely devoid of gasoline and fuel burning cars. It's going to be all electrical. Now, whether you believe that is true or not, which I don't, but
Did he go?
believe
Did
it
he
is true or
go
not.
to the Elon Musk School of Promotion?
Oh
Or
God, probably. This
Yeah.
is a bit of a plague in Vancouver. These left-leaning mayors that overpromise the green world. But for that to even come close to happening, not only would our electrical grid need to be magnified by an order of magnitude, that means how I can't even begin to wrap my head around how many vehicles would need to be replaced and how many batteries would need to be made. So I started thinking about lithium a lot and have been for the last couple of years. But one of the challenges with these brine projects is scalability. I kind of think of it like it's like you're sucking a liquid out of the ground, and you're really dictated by the size of the straw you have in it. There's a maximum drawdown rate that you can get these things out there, and because of that there's a maximum size that they're able to be. And the challenge with that is they'll always be relatively small operations, and there's a maximum value they'll be able to create. And it almost precludes them from being considered by a major mining company. Now, I happen to know that major mining companies, a lot of them are sniffing around lithium projects and trying to figure out a way to get into that space.
Mm-hmm.
And to do that, there probably isn't going to be a brine operation, which we're seeing the most of now. It's probably going to be some sort of hard rock operation. So Plateau Energy has this massive lithium project in Peru. And I should say a massive prospective lithium project because it's not proven out yet.
Mm-hmm.
But if they're able to do what they say they're going to do, this is one of the few projects that I've seen that could be mined like a traditional mining operation, which means it is highly, highly scalable, which means it is much more valuable over the scheme of its life and will be much more appealing to a major mining company, and therefore will be much more susceptible to be taken out at a much higher valuation. So that's something that I'm thinking about right now in terms of lithium.
Okay. Thank you. That's helpful. So talk about Resource Insider, how it's evolved over the year, where it's at now, and project-wise, what's exciting you?
Yeah. So Resource Insider started with a very nebulous claim that I was going to go out and I was going to find the best deals we could find, and I was going to invest alongside my members at the same prices, and we were going to find good opportunities to put our money into. And we've done exactly that, but we've gotten more specific in the sort of things that we're looking for. Still to this day, the number one priority is an alignment of incentives. Anything that we cover in our letter, I come in at the same price as all my subscribers, and we try to keep our incentives fully aligned so that they know that I'm working for them and that I don't really make any money unless they do. And this just comes back to what we were talking about earlier, in keeping yourself honest and not giving yourself the opportunity to do the wrong thing. And that's very important to us. But what we are really focused on now is really, I would say, two different styles of investment. We're looking at seed round stage catalytic capital. So what I mentioned before with Kingfisher, a private company where we're able to come in very, very early, be the first ones on the ground, add that first dose of capital on the same terms as the founders. That's where we like to be, because we know if we're getting in the same price as the founders, if it's still private, there's hopefully an IPO event in the future. We're going to hopefully see an uptick from that, and we know that management's going to be motivated to get that share price up. The other thing we do look for is just cheap deals on the market in private placement opportunities, typically that have big, fat, long-dated warrants. So companies that will be financing hopefully at a discount. I'd like to see, probably 15% discount to what they're trading at, and then a full warrant for a minimum of 2 years that I know is going to, that will give me a lot of options with that company. So I'm hoping that obviously the share price will go up, but even if it maintains, we're able to sell our stock and build up a bank of warrants that will keep exposure to those companies down the road.
So for those who are listening, Jamie, for those who may not be familiar with building a warrant bank strategy, why don't you just dive in a little bit more? And for those who may not be familiar listening to the podcast with warrants, it's something that we employ and fund a few, not a lot, uranium companies that are looking to raise capital, and they issue warrants. We're pretty difficult to get capital out of, but we do some of them. Why don't you share with listeners why you do that and how the warrants work?
So a lot of these companies that are already publicly listed, they're already operating, often they find themselves in a position where they need more cash. And what they'll do is called a private placement or a PIPE, and they'll raise money. They'll raise money by selling equity to accredited investors or to institutions of some sort. And often what they'll do in this situation is they will sweeten the deal. So they'll do things like offering the stock they're selling at a discount to what they're currently trading at, or as I was saying before, they will offer a warrant. And a warrant is, I think, a thing most investors have never come across before, but it's fairly common in the mining space to help incentivize this catalytic capital. And how it works is, how do I best explain this? It's essentially an option to buy a share at a given price down the road. So if I buy into a stock that is $1, it has a unit, and that unit is consisting of a share and a warrant. It means if the stock is at $1 and the warrant is at $1.50, it means as soon as the share price goes above $1.50, my warrant goes into the money, and I get the value I can cash in on that warrant on anything over $1.50. So if it's $2, that warrant is worth 50 cents. If it's $2.50, that warrant is worth $1. And basically, it only is ever worth anything if the company is successful. But if the company is successful, it really magnifies your returns.
Yep. Yeah, well described. Okay, so you're doing those deals. You're doing warrant deals. You're doing. You're trying to get the best price possible for people. So, how about? Can you talk about anything that's exciting and interesting to you now? I know you. I'm sure you have to be somewhat proprietary, but what's striking your fancy now?
Yeah. Well, I'll start by saying that all the deals we do participate in, you have to be an accredited investor. Particularly in the U.S., this means you make over $200,000 a year for the last 2 consecutive years, or you have over $1 million in assets, not including your primary residence. So this is the criteria set by regulators to participate in these types of things. And it's why we keep our list quite small and selective. But what we're focused on right now is actually a seed round opportunity in the gold space, which I'm really, really excited about. We spent a lot of time trying to figure out our next deal. We saw a lot of opportunities. We did the math on it last week, I think, and it was just over 500 opportunities we'd reviewed in the last year. Wow. Currently, we've done 4 of them. We're on our 5th one right now. And this is the one I'm probably most excited about for this year. Basically, I'll speak in generalities, but me and my members are going to be investing alongside a gentleman named Lucas Lundin, who is one of the most successful mining billionaires in history, into a company that he is supporting and founding in West Africa. And it's a seed round stage. They've brought in a really, really tremendous management team that's created nearly $10 billion in value over the last project that they sold. And they're out to go do this again in West Africa. And because of some very long-standing relationships that I've had with the people involved, our group got invited in to participate. It's highly oversubscribed, this deal, and we have a nice allocation for our members. So I'll be putting my money in. My members are able to put their money in, and it's extremely exciting. There's very, very few opportunities you get to invest with someone like this on the same terms. When you've gotten to that level in your career, these guys can really just turn companies on at a whim. Generally, their name just helps support a company and see it trade higher than a lot of their competitors would. And they can be very selective about who they allow into the deal. So it's very vindicating to a lot of the work that we've done over the last year, and I'm excited to be a part of it.
So how do people learn about Resource Insider?
Yeah, very simply. Go to resource-insider.com. If you are an accredited investor, sign up there, and we will send you lots of information, including free educational material about how we make decisions, what we look for, our views on the sector, all sorts of things like that. You'll also hear about the deals that we're working on in detail. And if you're interested in those deals and you are an accredited investor, you can buy our product and participate alongside me on the exact same terms, and as well as all of our other members. Good
stuff, man. Thanks for getting up early on the West Coast.
Yeah, no, it's good. It's good to have these in the morning. It's easy to get stuck in bed or to working weird hours. I find I've been working until like 11, 12, 1 a.m. in the night, and I'm operating on a different schedule sometimes.
Welcome to my world. Good catching up, man.
Yeah, thanks for calling, Mike.
You bet, buddy. Well, I hope you enjoyed my conversation with Jamie Keech. I really enjoy speaking with Jamie. He's a breath of fresh air, and he kind of tells it like it is. And I'm buddies with his partner Chris McIntosh, and they just let it rip here. They call it like they see it. So always enjoy speaking with those guys offline. I've had Chris on several times. I've had Jamie on once before, so I thought it was be good to catch up on what he's thinking in the world of natural resources, a little refresher on what he looks for in companies, because I know podcast listener wise, many of you are natural resource investors. I know a lot of people listen because they want to hear I'm going to say something about uranium or have uranium guests on. So, which I don't do every week. I see some of the reviews that say it's the uranium podcast. But anyway, hope you enjoyed it. Hope where you are, the weather is starting to cooperate. I think we're getting a little break in the heat here. And it is less than 2 months away from NHL training camp. So let's everyone should put that on their calendar. In the interim, we'll speak next week. I hope you have a nice week. Thanks.
The information presented on Talking Stocks Over a Beer is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.